Early gains for some of this year's biggest IPOs are giving investors hope for a bigger recovery in new transactions. The Renaissance IPO ETF has surged over 30% this year, but has been cut in half from its closing high made in February 2021. For more on the IPO market's next move, let's bring in Seth Rubin, head of U.S. equity capital markets at Stifel. Seth, great to have you with us. Why do you think there's going to be a pickup in the back half?
Yeah, thanks, Melissa. Thanks for having me. Look, we've started to see some real signs of improvement in the new issue market, and I think it's driven by a couple things. One, we've had investors just return to some confidence and some conviction in what they're buying. And two, frankly, we've had a really high-quality cohort of companies that have not only come to market with the right story, but have been priced right, have actually put together the right syndicate, have de-risked the transaction as much as they can, and you've started to see those deals perform. So I think we're going to now start to see a few more transactions. Every month, you'll get a couple more deals. You'll start to build some momentum, and I think that really opens up the market as we head into 2024.
If interest rates stay higher for longer, Seth, does that lessen investor appetites for new issuance?
There's no question. I think interest rates are probably the biggest headwind to the IPO market right now, not only because the investors have more opportunities in terms of where they're going to put their money and what that risk-free rate of return is, but because it affects the core business of most of the companies that are looking to come public. You talked about the peak of the Renaissance IPO market and where that index peaked out. You look back to the end of 2021, you had free money, right? And you had the ability for companies to spend in perpetuity for growth, and you had a real fear of missing out from investors. So all of those things lined up along with peak valuations. You have none of those things now, right? So the companies that are coming public are going to come public with a view that we're going to have to be able to perform and outperform the market in a higher interest rate environment.
So I guess my question would be, why now? I've always understood in the past when volatility was coming down, markets are rocking, and investor confidence is starting to come back, and CEO confidence, that's when you start to really see the deals come up. And the high quality of the pipeline has been there for a while. So what's changing right now that you think is really going to open the floodgates?
Yeah, so I don't think we're in a market that opens up right now, right? I think we're going to start to see the beginnings of those openings, and this is something that's going to take a couple of quarters to build, right? I would compare it to, if you look at the last two major disruptions in the financial market, you can go back to the dot-com bust in 2000 and 2001, and then you can look at the financial crisis in 2008 and 2009. And what you'll see is coming out the back of those, you've had a couple of quarters where you've had a handful of IPOs, cohort by cohort, that have opened up the market, which led the way to a much bigger cycle. So, I think we're still in a rebuilding mode. I think we've got a couple of quarters where we're going to see some successful IPOs. Look, the buy side, they're very smart, right? People are choosy. They've got the ability to say, I want everything right now, right? I want high quality companies. I want growth. I want unit economics. I want profitability. I will be very selective of what I buy. And if we can get those deals to work over time, that opens up the market. And I think as we get into 2024 and certainly into the back half of 24, we've got the underpinnings of a really, well laid out market.
Will there be certain sectors that lead the way in terms of new issues?
Yeah, I think we're going to get back to the traditional growth sectors, right? Right now, you've seen some esoteric deals, and you've come across things that maybe are a little bit less sexy, right? You've seen some energy, and you've seen some insurance, and you've seen some other things. Biotech, right? We've got this unbelievable cohort of companies in biotech that are driving change in the market, bringing products faster than they've ever brought before. Technology, where you've just had this massive dearth, right? You haven't seen a lot of technology IPOs now in 24 months, right? So you've got a huge backlog there. And I think in high growth consumer, right, where you've got some brands and you've got some companies that were really built for the new economy that investors are excited about.